Welcome to my channel, The Day Tradester, and we're just going to jump right in and start selling some of our stocks. Wow, what a day. Today started out great in the S&P 500. If we look at this candle, today's candle, you can see we opened roughly a little bit more than $1 than our close yesterday. It ran up for the first 30 minutes, and man, it was exciting. Nearly everything in the S&P 500 was just flat out green this morning before 10 o'clock. And then 10 o'clock hit, and it's just was a down day all day until about a little afternoon, and then it's just been choppy, slowly going up since then. If I was a betting man, if I was like on a roulette table, if I was a betting man, I'd bet that the next day, tomorrow, is going to be a up day, that we're going to open up and then close higher. But I'm not a betting man. I'm not like that. I might be in the stock market, but I'm not using it to gamble. And I wouldn't doubt that there were plenty of people this morning that got excited and got caught up in the FOMO and started making some bets, and then the market turned on them and they ended up losing it. Well, for tomorrow we have the PPI coming out, which is the Producer Price Index, which measures the average price of what our domestic producers sold their goods for, as opposed to yesterday we had the Consumer Price Index. This is a price of a specific basket of goods purchased by U.S. consumers, and that report was great. So looking forward to tomorrow. Hopefully tomorrow's report is going to be similar to yesterday and right in line in reference to the inflation, or in yesterday's case, the lack thereof. So let's go on and move on over to our sell alerts. The first alert we're going to look at is for Cisco. Cisco is actually going to earnings this afternoon. We currently have 12 shares, which is 4 books of 3. So I'm hoping that we'll be able to sell 2 of the books and see what our prices were when we purchased. So we purchased 12 shares back here at just over $70. Now, I've been day trading on this, and when I day trade, if you've noticed in some other videos, you'll see I've got some stocks that I actually day trade. Now, when I do day trade, I only day trade with 1 book. If this is your first time watching any of my videos, I figure out the total amount of shares that I want to purchase for that stock, and I'll divide that by 4. So 1 book is 1/4 of the overall shares that I actually own. And I only day trade with 1 book. So I actually have 9 shares that I purchased at $70.04. These 3 shares are part of my day trading, and I was day trading even today. And this was purchased higher than the current price, so that's why there's a limit order, a sell order on that. So I will sell 2 books, which is 6 shares. So we're going to sell 6 shares at the current price of $70.74, hopefully. All right, we're going to try 6 shares at $70.73. And there we go. We've got a small profit of roughly 70 cents per share. So that's $2.10 in profit off of Cisco. And now I'm going to cancel this limit order because I just sold 2 books. I sold 6 shares of Cisco before earnings, just in case price moves down. But I also want to be able to capture 6 shares, 2 books of movement if the price moves up, if the price is favorable to us. And I do that for every stock that I have that's going to earnings. Another one that we have going to earnings, which is the second and last, is DLO. Now, current price is significantly lower than my purchase price, so we're going to come in here and we're just going to cancel half of those shares. So I'm maxed out with my 4 books of 32 shares, and I sell them in blocks of 8. So if we see, we'll keep our sell order for the lowest 2, and we'll cancel the 2 highest price. So now we've got 16 shares. The price is at $14. The sell order is at $14.02. So if price spikes up and it triggers that, that's fine. And ultimately, price might possibly trigger that and then just ultimately move down. So we'll find out tomorrow. All right, so now we're looking at McDonald's. That one actually did hit a sell trigger as opposed to going to earnings. So now we're actually looking at our triggers. So we had price yesterday fall below our fast moving average, which is a trigger. However, today we've got price moving back up, which at this point really doesn't matter because all of my McDonald's shares I've purchased at $316 and I purchased another one at $322. So McDonald's isn't going to spike. So we're just going to leave this and look at our next sell alert. Now this alert was triggered several days ago. We've been taking a look at this over the past several days. You can see NRG is a stock that I day trade, and you can easily tell which stocks I day trade and which stocks I do not. The stocks I do not day trade do not have this much activity on it. Now we've been looking at this for several days because price dropped drastically beyond our fast moving average and beyond our slow moving average, which in itself, that's 1 and 2 triggers. So we've been watching price move. We did not sell based on those triggers the following day on confirmation because price was higher than the lowest price of the previous day. At any point, had this price dropped below this low point, we would have sold or tried to sell, or at least set sell orders. But we have a cross yesterday, and we have confirmation of the cross of our fast moving average below our slow moving average, which indicates that this might be in a downward trend for several days or weeks. Now, once we have this confirmation, I try to sell out of all of the shares that I own. Now, we currently own 9. We have a limit order on 3, so this is already higher. My day trading stocks are already higher than the current price, so we'll leave that limit order there. Now, unfortunately, 6 of the shares are also higher than the current price, but 3 of the shares I bought for $153.31, so we'll see a small profit. So we'll sell 3 shares currently at the current price, hopefully. That did not go, so we'll cancel that limit order. This one here, and we'll drop down to $153.93. That did not go, so we're going to cancel this and then just hit sell market. And we sold that at $153.80. So there's a 50 cent per share, so $1.50 for that book. So what I've started to do is any stocks that I have to place a sell order, I'm only going to show that once for the video. That takes up a substantial amount of time. And once you see how I place one sell order, there's no reason to show you the rest for the remainder of the video. So this will be the first one for this video. I'm going to place a sell order for NRG. Come down here and find that in our watch list. Right click. We're going to hit a sell. We're going to be selling 3 of these. And we're placing our sell order. And the way I work my sell orders is to determine what my purchase price was. And in this particular case, I bought 3 shares of NRG at $154.78. So I look at the first digit, which is in the hundreds place, and I take 10% of that, which is going to be 10. So 10 cents is what I will add to my original purchase price of $154.78. So it's $154.88 is going to be my sell order, $154.88. And we want that good till cancel. And we want it operational on extended hours. Okay, so we got good till cancel, extended hours. We want to confirm and send. So here is our limit order for that. And for the rest of the video, whenever I have a sell order, I'm just going to do that off camera. Right, another stock that we've been looking at over the last several days is XLU, which is an ETF for energy stocks. And the reason that we've been looking at this for several days is we had an alert trigger 5 days ago. However, we did not have confirmation. We had price go back up above the fast moving average. It stayed up. However, it was in a downward trend. Following day, again, we had a downward trend. So this is a new alert off of the original alert. And yet the next day we went up, which was yesterday. We were in an upward trend, and now we're in a downward trend again. So for 1, 2, 3, 4, 5, for 6 days now, Well, we won't count the original. For 5 days, we've basically just been trading in a $2 range. This is the range from the bottom here to the top there, roughly a little over $2. Now we do have price action, or we do have the MACD line moving across the signal line on the MACD. However, price is still above the midline of the histogram. So that's not, this in itself is not a good indicator to let me know whether I should sell or not, because we are above the midline. If we were below the midline and we had a price like this, I probably would sell in preparation for a continued downward trend. But when it's above the midline, we could just have price go back up tomorrow. Now the last one we're going to look from a previous day's alert is Monster Energy Drink, MNST. And the reason we're looking is we sold 2 books, which was 6 shares before earnings. 6 of those books, we had a nice price increase, and we're watching to see if price continues to fall down. Tomorrow, we'll look at this again tomorrow, and if we have price when I'm looking at these charts and recording my trading, if I have a price below $63, I'll go ahead and sell 1 book and try to capture that profit. I don't want to continue to lose gains if price continues to move down. Right now, from this purchase price, we're looking at roughly a $3 gain per share. And it's now roughly $3 from its highest point that it reached 3 days ago. And that's what we're all here to do. We're all here to buy low and sell high. We just don't want to sell too early. If you've watched some of my videos already, you've seen I've got some some rules that are set in place to dictate or to tell me whether or not I'm going to sell or buy, which is based actually on price action alone. As it falls, I'll have alerts triggered to tell me that it's time to sell, or as it rises, I'll have alerts that trigger to tell me that it's time to buy. And then we also have earnings, which is an indicator that I need to sell half of the shares or half of the books that I actually own of that particular stock. So if you're following me and making some of these trades, you can be assured that I'm not going to just be willy-nilly and say, hey, today's a great day, I just feel like buying this particular stock for no apparent reason. Or, hey, I want to sell some of these shares for no apparent reason, just because I think price might move down. As we continue to go through these charts, momentum trading works. We wait for an indicator. In this particular case, like right here, we wait for a crossover, or here we wait for a crossover. And it's not 100%. Every time we have a crossover, it continues in that direction. We certainly can have something like right here. We had a crossover, but it really didn't do anything for nearly half a month. So here we were just watching price action, waiting until price action told us what to do. So same thing on the cross here. We didn't buy here. We had a crossover, so I don't buy just on the crossover. I have to have price action in the candles telling me also. They have to be complementary indicators. Just because we have a crossover doesn't mean I'm going to buy. I don't buy unless I have confirmation. Had this been a green candle on up on the day that it crossed, then I would wait for the next day for a confirmation. And that is how I complete all of my trades, buys or sells. All right, now back to our purchasing. Now, we just finished our sell list. There weren't too many triggers, and there weren't too many stocks to look at for our sell list, because price, as you saw earlier on the S&P 500, has been going up, or it actually went up and started higher than yesterday. So when price is moving up, there's no really sell triggers actually being hit. So we'll take a look at our buy lists now. What time is it? You know what time it is. Please click those buttons. All right, we got through that. So now I will show you my process on how I buy my stocks. So the first purchase that we want to take a look at is JBL. This has been something, if you've been watching videos, we've been looking at this for about a week now, because we have consolidating price, or price just moving sideways, since July 7th. So this has just been a back and forth with triggers being hit almost daily or every other day. So yesterday we had a cross of the fast moving average over the slow moving average, but unfortunately we're not buying because we have price moving down all day today. And as you can see, it may likely go up tomorrow. So we currently only have one share and we've got a sell order placed on it, but we are not doing anything with our buy alert today. So the next stock we're going to look at is Uber. All right, so taking a look at Uber, yesterday we had a crossover of our fast average over our slow average. However, today we started out with confirmation, great. But unfortunately, as the day went on, price has steadily dropped significantly. We've gone from $92 roughly down to $90.23, so $2.80, we'll just round it out. So we've lost roughly $2.80 in price. We're also below our midline of the histogram. Both the MACD line and the signal line are below the midline of the histogram. So we'll just wait, take a look at it tomorrow. It'll be on our list and we'll see what price action is happening tomorrow, especially after PPI. Another thing affecting this price with Uber is Uber has partnered with DoorDash. So they right now deliver food. However, Amazon, either this morning or yesterday, they announced that what am I trying to say? Uber is in competition possibly with Amazon. Amazon just reported that they are going to be in over 1,000 cities and areas in the U.S. having same-day delivery service for food. So that's another thing affecting Uber's price. You had Uber drivers out there not just making money on delivery and transport of people, they are also making money on delivery and transport of food goods. So let's just go ahead and move on to the next one. And that is XLY. And that is an ETF for consumer discretionary. All right, so we have a good cross. We've got a strong move up while a lot of the stocks are going down now in the S&P 500. This ETF is going up. It opened up higher just like the S&P 500 did, but this one's been going up all day. So we're definitely going to be buying this. I purchased 4 shares, so that would be 4 books of each one consisting of 1 share. I currently have 1, so we're going to be buying 3 books, or in this case, 3 shares as well. And we're going to be purchasing at the current price. And we got it at almost $230. So if you're following me and you're thinking about copying some of my trades, this would be a good one to start with if you already haven't. You'll please feel confident and take comfort in knowing that I look at my charts every day. I look at my stocks every day. So I will be updating you accordingly as price moves. Another reason it's also good to possibly consider making the purchase of this particular ETF is because consumer discretionary, which consists of a lot of mid cap and small cap, and they're pretty much on the move as some investors, both retail, mainly institutional. It's mainly institutional investors who are slowly moving money out of tech and moving it into some of the more defensive stocks. And consumer discretionary is largely made up of defensive stocks. So purchasing this stock to possibly follow me is as good as time as any. Of course, you'll have to determine for yourself how to size your account or how to size your purchase. My minimum purchase of whatever share I might be purchasing is a minimum of 0.5% of my total account value. If you're new to trading, that is definitely a great place to start. That way, if this trade moves opposite the direction we want it to go, and it goes down from here, if we don't sell out, then at least you know it's not going to damage or really hit your account balance hard, and it won't be extremely detrimental, and you can keep purchasing other stocks. Survivability is what we're looking for. All right, let's take a look at Unity Software, which is just ticker symbol U. You can see this is a stock I day traded. Yesterday we had a cross. We had a strong price moving up yesterday on Unity Software. We do have a continuation today. We opened up higher than we closed yesterday. Prices moved down. However, it has moved back up as this afternoon has progressed. So we're going to find out how many stocks we have. We currently have 8 shares of Unity. I max out at 32. So that would be 4 books of 8 shares each. So we're going to be buying 24 shares. So there's 20, and there's 24. And let's go ahead and see if we get these at 37.29. And we did. All right, that might be another share for you to consider to follow me on. Next on the list is Warner Brothers Discovery, WBD. And why do we have a trigger? We have price moved above the fast moving average. However, our fast moving average is significantly lower than our slow moving average. We are just past earnings. Their earnings was roughly 75 cents better than what the analysts and experts had estimated, so that's a good move. So if we take a look just at the price action alone, we've got strong price action. Again, we're looking at possibly money being moved from tech stocks to defensive stocks. Warner Brothers is a defensive stock. No, it's not. Warner Brothers is not a defensive stock. My brain is moving, or my mouth is moving faster than my brain. So what I was thinking is that money is moving from tech stocks to defensive stocks. And this is not a defensive stock. I was thinking that if this was a defensive stock, maybe we would consider purchasing it based on how the MACD is moving. We have a lot of volume of price moving up both yesterday and today, but we're not going to because it is not a defensive stock, and mainly because our fast moving average is below our slow moving average. And we like to purchase at the cross upwards. Next one is Moody's, MCO. You can see this is a stock that I day trade. We had price move above yesterday, the fast moving average, and we clearly have continuation. So we're going to look at, we have 2. I like to be maxed out at 4. However, since this is just a price move and not a cross, when price crosses when the fast moving average crosses the slow moving average, that's when I like to purchase all 4 books or max out on my possible shares. Once we've made this cross and we have all of our original shares in purchase, then we just move in and out per book using 1 book at a time as price moves back and forth across both averages. So in this case, we're just going to be purchasing 1 book, which is 1 share. So we're looking at 1 at 520.50. All right, maybe not. We're looking at 1 at 520.53. All right, let's take a look at my market. By market, 520.76. 25 cents higher than what we were looking at. Now, from our day trading activities today, we had a purchase, but price dropped on me. So we have a limit order for that one particular share or that 1 book. Again, I use 1 book to day trade with. All right, next on the list is Goldman Sachs, GS. Wow, they had a big move yesterday. Look at that. I wonder what news came out there. I guess that was possibly just the response from the CPI report. Well, anyway, we have price continuation from yesterday's cross, and that continuation started higher than yesterday's close, even though price is moving down. You can see by the hammer, it had moved down significantly, and then it's moved back up well over 60% from the bottom. So we're going to go ahead and, again, this is a price move and not an average line crossover. So we're going to purchase 1 book, and we purchase 4 shares is maxed out, so that's 1 share per book. So we're just purchasing 1 at 7. We'll just come up here at 743.47. Nope, we'll try 49. And there we go. You can tell by the lack of activity, this is not a stock that I day trade. So you can see each price of all 3 shares that I currently have. And you can see we're looking at roughly $110 in profit off of this one. Hopefully price keeps going up. The big thing is when price starts to move down, we don't want a huge move down. We would just like it to move down slowly, or at least a candle as big as this, or maybe 2 candles as big. Hopefully we don't get a $50 move and take away our current unrealized gains. If you are thinking about following me, this is a stock that I would suggest not to possibly purchase. We've got quite a run. The only reason that you might want to consider making this purchase and copying this particular trade is because of the future potential rate changes. The banks, I believe, typically do well when there's an interest rate change going down because more people will take out loans, which makes banks more profitable. Goldman Sachs certainly provides liquidity and money to consumers and lenders. If you're new or starting out, or you don't have a large portfolio balance, this is a pretty pricey stock. Another way that you can capture Goldman Sachs to follow me, if you're thinking about doing that, is to purchase it through Schwab Slices. If you're using the Goldman Sachs trading account, if you're not using Goldman Sachs, that'll just be called fractional shares. So whatever brokerage you're using, they likely have fractional shares available. All right, another one that we're looking at is going to be TPR, Tapestry. Yesterday, you can see I have been day trading this there's not a lot of price action on this. So we had price go above our fast moving average yesterday. We have confirmation today, so we're going to be purchasing one. See if we get it at 113.40. There we go. So I believe we have one more to look at, and that is Netflix. Well, now that I'm looking at my chart, I take that back. This is not one that I'm day trading. You can see, so we had price trigger here going down, confirmation yesterday, or confirmation here, and we sold. Then we had price move up. However, confirmation was not true until this day. We had a price confirmation, so we bought. Then we had trigger down, confirmation, so we sold. Then we had trigger up yesterday and confirmation today. So these are not day traded. I was mistaken on that. So now we'll take a look at Netflix. So what do we have here? We have a cross yesterday, and we have a confirmation in price moving above and opening today, like several of the other previous stocks. However, prices moved down from roughly 12.30 to 12.34 to 12.09. So that's roughly, we'll just round it to $25 movement down. And both of our averages are currently below the midline of the histogram. Question is this the beginning of a move that slowly goes up and up and up and up and up and eventually crosses the midline of the histogram? Or is this just a temporary, hey, look, purchase me, and I'm going to do a fake out and then just turn around and go back down? Which is why I look for confirmation, which is why I use confirmation. And that's not 100%. Confirmation is not ever 100%. I can easily get confirmation, and the following day is the beginning of a downward trend. Now, had this been above the midline of the histogram with price going down, and we have this cross, I would consider purchasing it because Netflix, by some, could be considered a defensive stock. Defensive stocks are stocks that people purchase when times are hard or times are getting tight, and supposedly this inflation is going to hit because of the tariffs. It's not happening yet, but the experts just keep on saying, and I use air quotes when I say experts. This is one industry where the word experts, you need to use that term loosely. And I'm not saying that to demean any of the experts' intelligence. They are extremely smart, intellectual, light years beyond the intellect that I possess. But they can't predict the market. I mean, they could try to predict it, but they are wrong. They've been calling for a recession. I started trading in October of 2022, and they've been calling for a recession since I started. But at any rate, I would consider purchasing it. I wouldn't be able to because I only have $1,033 and I don't use Schwab slices. If I don't have the money, I just move on to the next stock if there is one, and then I'll purchase that. But we are not purchasing Netflix. We'll keep it on our list and take a look at it tomorrow, especially after PPI. Who knows? PPI may be great, just like yesterday's report, and everything will start moving right back up. So here, if we look at the Netflix chart, you'll see that I had 4 shares. Now, I'd been holding on to some of these shares since before Liberation Day. Price finally reached a point in which I can sell. So I sold out, and I got a little nervous because it was a $1,200 stock, and I didn't buy back in. I sold. Again, before Liberation Day, I had one share at over $1,220. So it finally sold at $1,221. But I was too concerned about buying back in because the MACD. If we look, we have a continual increase in price. I have a small drop here, but it certainly went up another $80 that I didn't take advantage of. And the reason I didn't is because the MACD was in a downward trend. And this is what is called divergence. When you have the MACD going in the opposite direction, I was going to say opposite direction of price. There were other few indicators, but something happened to the video. I must have accidentally turned it off. Sorry about that. Big oops there. So ultimately, I took this information and I got a little nervous. I didn't want to put money that possibly might turn around, and it did turn around. However, I didn't go back in because we still, when price crossed, we were still in that downtrend, and it didn't cross and start moving upward until 4 days after the confirmation of the cross. And by then I just didn't get back in. So this is an example of not just looking at price action, not just looking at the moving average, but looking at the MACD and the RSI and making a decision, an informed decision, or at least as best of an informed decision that I can make. But if you are following me, Netflix is a good stock. Actually, it's a great stock. So if you feel comfortable purchasing it, go ahead and purchase it. This is actually a pretty good signal. It's not great, and if price moves tomorrow, or it moves in our direction, I'll be purchasing tomorrow, and we'll still be on the same trade together. Or you can wait and follow me. Remember, if you do choose to follow me, I'm not an expert. I'm not giving expert advice. I'm showing you what I do. I'm showing you that I make money. And it would be nice through following me if you were able to make money as well. But I offer no guarantees other than I plan to be here every day trading and making money. So it's now 3:30. We're going to reset the SPY. And what we'll do is I'll come back on just before we go to earnings for Cisco. Actually, we'll go ahead and pull up the chart now. So we're going to come to our setup. And we're looking for our afternoon earnings reports charts, which is right there. And we're looking for Cisco, which goes to report at 5 minutes after 4, and the other one is DLO. And that one reports at 5 minutes after 4 as well. So they're both 5 minutes after 4. So 30 minutes for me, immediately for you. We'll be right back into this video watching price action. Well, we're not actually going to look at those two going to earnings because I looked at tomorrow morning's earnings and Tapestry, which we just purchased 1 share of Tapestry. They're going to earnings. So we want to sell 2 shares. Doesn't matter what price is doing. Doesn't matter what's happening to the MACD or the RSI. When we're going to earnings, I sell half of our books. And in this particular case, we have 4 books. Each book has 1 share. So we're going to sell 2 books. So what are our purchase prices? Now, because we had some price action up here, alerts, we sold 2 of these shares. So I currently have 2 at $84.34. I have 1 at $112.15. And I just bought 1 today at $113.40. So we're going to Sell 2 shares right now at 113.21. Well, they went at 113.20. So on the share that we bought today at 113.40, that one still is in our account. We just sold here the 112.15, so we made roughly $1 on that one share. And on this one, we'll just round it up to 30. So we'll just stay at $30. We got $30 in profit on selling 2 shares of Tapestry. And this is tomorrow morning. So now we'll go back to our afternoon chart. And there we go. And again, I've got 30 minutes until I come back on. For you, it'll be immediate. All right, we are in looking at Cisco, and this should be DLO. Here we go. You can see we've already had some price action on the earnings. Price action at earnings is volatile. A lot of people do not trade. Many people sell out of their positions before earnings because they don't want to be here, and price go their direction. And we have, you can see the immediate price reaction. So we have Cisco initially is going down substantially. So we're already looking at roughly $3 from where it closed. And DLO, we're looking at almost $1.50. So earnings, you'll have to make the choice of whether you want to hold your positions through earnings, do what I do, sell part of your positions through earnings, or sell everything and just wait until you get through earnings and then buy back in. That is, all of those are viable strategies. You just have to figure out what you are comfortable with. And I am comfortable with selling half of my positions. One thing you want to remember for me is the stocks that I trade, they are long-term positions. I'm holding these for years. I'm not just looking for a stock for the moment. I'm just not looking for a stock for that day. I am buying by swing trading my long-term positions that I will hold for years, unless something fundamentally changes with the stock, or they go bankrupt, or they get kicked out of the S&P 500. Then we'll adjust accordingly. But for now, I trade, day trade as well, my long-term holdings. So as you can see, we have pretty good price action. It's got a significant move. So we might actually capture these 16 shares, and we'd be looking only at a 1 cent gain is what we'd be looking at. But I've been holding on to these for, geez, a very long time, since 2020. Sometime in 2024 is when I bought these particular shares. I don't have a date on the board accessible immediately. So if it does turn around eventually, I hope it does capture, and that way we can get the balance of the cost of the shares added back into our portfolio. But hopefully it just keeps going up. If this is your first time watching the video, one reason I don't mind holding onto the stocks, well, like for example, I'm not going to be selling out of Cisco. The price now, let's see, I bought shares at $70.04, 12 of them, so this is already lower. And if it doesn't go back up, I did sell out of 2 shares or 6 shares earlier today, I believe. If I was able to sell half the books, then that means I only have 6 shares left. But I will hold on to them. And the reason I do not mind holding on to these, I do not need to sell because they are my long-term holdings. And the other benefit is both of these stocks, they offer dividends. DLO offers a dividend of over 4% yield, and Cisco is a little bit over, I think, 2%. I don't remember these numbers right off the top of my head, but many of the stocks that I have, that I trade, they offer dividends. So holding on to them is not an issue. And you remember, the thing you need to keep in mind is you do not lose money unless you sell. As long as you're holding on to them, you've got a drop in your portfolio value. And what happens to the S&P 500 over the history of time since its existence? It goes up, and it goes up significantly in the long term. So that is, we'll take one more look. You can see how the earnings reaction is happening with our price. It's a significant move on both of these, which is common and very regular for any stocks that are going to earnings to have very significant moves. And depending on the position it can make or break your account. So we're going to go back to we're just going to reset back at the day Tradestor, and then we're going to, all right, so we're there. And then we're going to come down here and we're going to look at our results for the day. And here are the results. We're looking at a little over or just under $176. We're over. And as of yesterday afternoon, our portfolio balance was at 16.5% for the year compared to the S&P 500 at 10.44%. So just over 6% better is our performance and compared to the S&P 500. And we are done for the day. Remember, tomorrow is PPI, so we might have another big price action tomorrow. All right, if you have any questions about my process on how I sell or buy stocks, please reach out. I'd be more than happy to answer them as best as I can. Thank you and have an awesome rest of your day.